if the crude oil moving forward at this point start to move up, and I believe that likely that the US CPI will also start to move up. I have observed a correlation between the crude oil prices and CPI over the last 2 years. In this study, we will see how the crude oil prices lead the inflation, meaning if crude oil is setting a new trend, the US inflation should follow subsequently. Now, crude oil is a leading indicator to track inflation or the CPI. If the central bank are still unsure where the US inflation is heading for this year, they may consider tracking the development of the crude oil prices. And this is what we're going to discuss today. There are three segments. The first segment, crude oil is the most inline commodity tracking the CPI. Now, among all the commodities over the last 2 years, crude oil moves in tandem with the inflation. We're going to study into that with a case study. And segment 2, we will discuss about my observation that why crude oil is the leading indicator to inflation among other many commodities. And segment 3, so therefore, we will study into the direction of the crude oil, and there are some interesting development the last few days. And before we get into the first segment, let's take some time to read into the disclaimer down here. Let's get started on the first segment, the most inline commodities tracking the CPI. And with this segment, we're going to compare two markets. The first one will be the CPI or the inflation number over the last 2 years. Then after that, we're going to compare it with the crude oil. How related are they in their movement, the way it moves? And let's go to the CPI, which what you're seeing here is that over the last 2 years or slightly more, that I want to take note of these 3 dates. Then after that, we're going to compare with the crude oil. Now, before that, we all knew that the inflation number in the United States has been staying at about average about 2.5 or 3% over the last 40 years. And then in April 2021, it started to move up, breaking away this 40 years range. It moved up to 4.15, as we could see. It reached the first peak at 5.34, which on this date, June 2021. Then it took a breather here. It's slightly lower, and before it decided to charge up again, reaching its second peak, which was at 8.56%, as we could see here. And that was March 2022. And then it took a breather, and before it reached the all-time high in the inflation numbers at 9%, and that was June 2022 before it started to come down. Now, these are or were the 3 dates I want to take note of. Then later on, we're going to compare it with the crude oil. Now, the other one that I want you to take note of is the wave, and we're going to compare it with the crude oil as well. Now, we could see here that from the range, the 40 years range, it started to break above, and that was the first wave, second, third, fourth, fifth, the fifth wave, and before it started to decline. And we're going to compare it with the crude oil on these two significance. The first are the dates of the 3 peaks, and then also we're going to compare it with the wave. Now let's go over to the crude oil right now. And what we're studying here is the crude oil futures, and I have displayed about 2 years period, so we can do a comparison of what we have studied just ago, US CPI. And over the last 2 years, I studied into different commodities, but not many commodities come that close to crude oil in terms of how it moved in tandem together with the US CPI. Now let's look at the wave count first, then before we look at the 3 significant peaks. Now the wave count, as we could see that earlier we studied from somewhere at the beginning of 2021 for CPI, that was a first wave, 2, 3, 4, 5, and after June 2022, crude oil started to decline. So is the US CPI. Now, if we're going to compare to the 3 significant peaks with the US CPI and the crude oil, it is also around the same month. Now, for this June and the crude oil, it peaks on the month of July 2021, but it's about there. And for the month of March, the second peaks, the significant peaks, the crude oil appear as well on the month of March 2022. And that's the same with the US CPI. And so is the June. It has also reached its peak in June 2022. And then it starts to descend down. So that has complete the first segment on the most inline commodities tracking the CPI, which is, according to a study, it is the crude oil. Now let's move over to the second topic about my observation over the last 2 years, why crude oil leads the inflation. What I mean here is that the crude oil, it seems to me, is a leading indicator of the CPI or the inflation, meaning that if the crude oil moving forward at this point start to move up, and I believe that likely that the US CPI will also start to move up. Now let's look at what happened here is that compare between these two peaks and the CPI that we saw. Now between the month of March and June 2022, compared to the CPI, we could see that the March 2022 for the crude oil, it peaked first. Then after that, June 2022 in the crude oil, it was a lower peak. That it seems that the crude oil taken the lead to start to move down. But we could see that the CPI, the highest peak, it was on a June 2022 before it started to move down. But the crude oil has already descended. Therefore, to determine the direction of the inflation or the CPI in the next few months to come, it is also important for us to track what will be the direction of the crude oil in the next few weeks or next few months to come. Let's move over to our third segment, which is we're going to study into the direction of the crude oil moving forward. And I'm seeing something really interesting here, the last few days development. And let's move over to the daily chart. And we could see that this is the daily chart of the crude oil. But before that, let me just, I always advocate that as investor or traders, when we get into the market, of course, as an investor, you may consider the oil-related companies to invest in or oil-related ETF or fund to be invested. But for traders, what we're studying here is the crude oil futures. And I always advocate that whatever we dealing in, we have to understand what we're trading into that market. And what we're seeing here is the crude oil futures. It states that every 0.01 point movement, which is the minimum movement, is worth 10 US dollars. It also means that a 10-cent movement is 100, $1 movement is 1,000, and a $10 movement, it is a profit or loss of a 10,000 US dollars. But of course, if you find that this product is relatively large, if you know how to read into the market, but your capacity is not there yet, you can always choose a smaller contract like the micro crude oil, which is basically a tenth smaller in terms of its quantum. Now let's look over and analyze this daily chart of the crude oil market. That I think over the last few videos we've come across that we understand how to plot the trend line. There are two rules how to plot a trend line. The first rule is that we have to find 3 significant peaks. Now it's different from what we have discussed earlier. And this is to construct the downtrend line. And very quickly, what I'm seeing here is we have to find the first peak. Oops. And we're going to join them together. And then the second rule is that we have to find the best fit. Now, I'm going to move this down. And we could see that this is the highest point. This was the highest point. And this was also the highest point at the opening price. That this was a very standard downtrend line. And what I'm seeing here over the last few days is that it kind of, this trend, this downtrend line, the last few days, it has broken above this downtrend line. So in that context, what we should be looking at technically, it seems like there's a transition from a downtrend. Technically, it could be moving into uptrend. So therefore, it is also important for us to look into, to deep into the fundamental, what constitute perhaps the change in trend for the crude oil. Therefore, the Fed concern is valid. They wanted to see the inflation coming down to around 2% in a sustained manner. And I always enjoy studying into the correlation between the markets. And I hope today's sharing is helpful with your investing and trading decision. I've included some past videos relating to today's discussion. You can see how these markets have performed according to our observation back then. Really happy that you have stayed through. You have many great trading weeks ahead.